It's like three consecutive candles of equal. What?
Also known as the Rising Three.
Yeah, it could also be called the Rising Three. But I think, well, usually when I hear the Rising Three, I think of three rising valleys. So,
Well, if you go look up the Rising Three pattern, it's a large green candle followed by three red candles that are slightly less than the last, or I mean, that are slightly smaller than each other and descending. And then the fifth candle in the pattern is another large green candle.
I thought
the three white soldiers or the three green soldiers or whatever you want to call them, I thought they were three blocks of equal shape.
Yeah, they're three consecutive green candles upwards that are of like basically similar, like the same or similar candle body size. That usually, like, you know, open. They all close above the last one. Like they're all of equal size, and the close is always above the previous one. That's the basic friggin' explanation of three white soldiers.
Yeah, that's way different than the Rising Three.
But if you just look up, three white soldiers, like you should be able to get a good definition on YouTube, or I'll find a good definition and I'll share it here. But let me go through fibs real quick for.
And not the Three Musketeers.
Three Musketeers. That's a chocolate bar, and a novel, and a film, and a play.
60.
Okay, go live. Go ahead.
Right.
I can grab your screen.
All right, let me figure out how to share. Start broadcast.
Hot stream. Suck.
Okay. So, Chubat Kale. Are you on my screen?
Indeed.
Alright, so a fib, real quick, basically is just when you take a fib and you take the bottom of a move and bring it to like the top of the move where like the theoretical top would be. These are basically just percentages. So this is like a 30, the 0.236 is a 23% retracement, and then the 0.382 is 38%. 0.5 is a 50% retracement. 0.618 is a 61% retracement of the move that we just previously did. So you can see, whereas this move, using this move as an example, if this was the beginning from where it bottomed out, and this was the top, you can draw a fib, you know, from the bottom to the top here, and these three are the most important. Basically, the 618, the 0.5, and the 382. If you take a move upwards, and the retrace, like there's obviously going to be a retrace that happens because this is just a big move. The retrace coming down, you want to pay attention to these three levels for sure, because if the asset's in an uptrend, it will most likely respond to one of these three levels. Most of the time, it will respond.
Can you show me the three again? It's because I have a small screen. Can you just show me three?
Yeah, it's these. Hold on, let me try to make this a little bigger. So the three
if you're
important.
on your phone, you can also enlarge the screen that he's showing.
No, I'm on my computer.
Is Jay listening? Because she was the asshole asking for this shit.
Yay.
He's multitasking, so let him.
So these are the three levels that are the most important. Is the 0.382 fib, the 0.5 fib, and the 0.618 fib. Usually, if an asset is in an uptrend, most of the time, wherever it tops out and starts to come down, if it's in an uptrend, it will usually respond to one of these three levels, the three middle ones here. So the 0.382, the 0.5, and the 0.618. So the 0.618, like that's considered a full retracement while still being able to be bullish or in a bullish uptrend. So you can see here, usually if it responds to the 0.5 well or the 0.382 well, then and gets a bounce from there and then makes a higher high, you can confirm that the asset's in an uptrend. Now if it comes down to the 786, then it's most likely not. So you can see here at this time when Bitcoin was pretty bullish, on this move here that it made, when it broke resistance, it made this big move up, and then when it retraced, it went all the way up. So it started at 17,000, went all the way up to 41, almost 42,000, and then when it retraced, it came down, and it got caught on the 0.5 fib. Basically, you can see there's some wicks that wicked below it, but no candle bodies really closed below it. So this is the 4-hour chart. So these candles are pretty significant. So whereas in this chart, if I was looking at just this chart, and maybe I decided to enter here for whatever reason, if I had TA behind it, and I realized, hey, this is getting like overbought. Like you can see in the RSI here, it's overbought. It's crossing the moving averages, or it's crossing over the moving average. Stochastic RSI. That's all. But that's all oversold. So like, say you have some inclination that it's oversold, or it's overbought. I mean, rather, and you say that that's the top of the move. If you mark that as the top of the move, you can also identify that it's beginning to trend down by seeing that it failed to make a higher high afterwards. So right here, so all these right here, like it broke resistance, made this high, came down and retraced, and then made a higher high after that. So these higher highs and higher lows, that's how you can spot a trend. Now here, where it topped out, it came down and retraced, and it didn't make a lower low, but it made a lower high. And then, following that, it made a second lower low. So, I mean, this is the downtrend here. So this right here was the uptrend. This is a downtrend, but those are just minuscule when it like those are secondary trends. If you're trying to spot the future primary trend, which is up here, if you're trying to spot that it's in a future primary trend, which would be this basically. Hold on. If you're trying to spot this trend beforehand, then you want to say, okay, Bitcoin just had a really nice move up. Now, if this is the top and it made a lower high, then it's going to start trending down. So maybe I sell here. If I didn't get a chance to sell everything here, maybe I sell the rest here because it failed to make a higher high. So now, where can we find where can we look for some sort of support if the price action has never been there before? So, like as you can see, like back in the day, there was price action before, not on this chart apparently because it's not that old. There was price action before in these areas. Wait, actually no, there wasn't because these are higher highs. Yeah, so this price action here, there's no structural support from earlier in the chart to support that there's to basically indicate that there's support there. So you can use these fibs, and what these fibs are like ratios, like as far as like size and dimensions, and it's part of a. Sorry.
What does that fib do?
Oh yeah. Well, what the fib does is it creates so visually aesthetic things that are like aesthetically pleasing. They typically come in dimensions of 618, like 1 to 1.618. So that's why this 0.618 is so aesthetically pleasing. So even subconsciously, people see that it's fallen that far, and they'll still be willing to buy, almost like subconsciously, because they figure, oh, okay, well, it's still higher than it was before, but now it's lower than it went after that. So if you're looking for where you might find support, where there has been no previous price action, and when you're in price discovery, like Bitcoin was in price discovery here. So when it was totally overbought and that ended up topping out, now we got to try to find a place to look for support without pulling from any chart history. So if you draw your fib from that move, you can see that it made a 50% retracement. So it went up. So this would be like 1. That's one move, and then cutting that in half, it becomes 0.5. So it retraced half of the move that it made up, and that before continuing upwards. So that's
can you use the fib to find an entry point? Because for here, instead, like you say, it goes down 50%, and would that be a good time to go in between the 5 and the 618?
well, yeah. Well, see, here's the thing: is if it's down from this move, that's. It may only be the asset may have only dropped. Like if you're talking about percentages, it's only dropped 30% in this move. But if you bring it all the way down to the bottom of the move, you can see that halfway where that halfway mark is, that's at the 0.5 fib. So it's 50%. It's half of the move that it made that it retraced. Not that the asset in value versus USD is down 50%. It's only down 30% from its previous high. But still, if something's down 30% from its previous high, then that might be attractive to most buyers and they might want to jump in. But where they're going to be looking to jump in, if they have no previous history, if there's been no price action over here to the left, then you have nothing to really go off of. So you basically want to find out, where did this bottom out before breaking resistance, which I've kind of identified that right here. I mean, I guess you could draw it a little lower here, but it hadn't broken resistance at that point. So if people are drawing it from there before it broke resistance, and they're looking for this to be the top of the move, and they're looking for a retracement, then most traders that, normally trade off of Fibonacci or whatever, if something's in price discovery, they know that not only them, but other traders know that these fib levels are what people are going to be looking at as far as targets go. So whereas Bitcoin was in price discovery, people probably drew a fib and they realized, okay, well, it's coming down. It bounced off of the 0.5, came up, made a lower high, so it's still trending down. But then it bounced off the 0.5 fib again 2 more times, like made slightly lower, made a lower low, and then but see this failed to make a higher high. So at this point, it's lower lows, lower highs, and then it came down and basically double bottomed at the 0.5 fib. So if you have your fib up, you could theoretically put this as support. And now, I mean, also if you wanted to, you could just draw, now that there has been some price action, you could say how many candle bodies has this hit. Or I mean, even just right here, you can see that this was a little bit of resistance before this candle just blasted right through it. So it kind of chewed up resistance, any sell orders that might be there. But when it came down and closed above...
Even if you look at those wicks, you'll look at the wick came down and made a higher low for the wick. Oh no, on the 2 that you just pointed to.
These ones? Yeah. So this wick's higher than this wick. But see, it came down, it fell down, and then got bought right back up. So people were like excited to buy it. And then when it fell down again, it got bought right back up again. So there must have been a lot of buy orders down here holding it up. But where the true support is really where like the candle bodies close. So let's say before this price action happened, if you were looking for support here, I mean, you could look at where these wicks bounced, or you could look at, basically this level where there's these wicks over here that couldn't quite get through it before it finally did. Or, I mean, you could just go from the lowest candle bodies. So these 2 are the lowest candle bodies. So that's kind of like what I would go for. I mean, you can try to get as many touches as you can in there. So like if you wanted to include these wicks, you could. But so let's just say if this is all the price action we have to go on so far, let's just say that I could identify a support right here, because that's where these 2 lowest candle bodies closed. If I identify a support there, you can see that the next time around after it came back down, it went down through it, but then wicked right back up. So that kind of confirms the support that it built here, and also the support that's lower. You can see that these 2 wicks both closed above these 2 wicks. So this is a huge support zone right here where these wicks are, but where the true support is where the candle bodies closed above. So now if we go over,
why don't you look at what it's doing now on like a 5 or 15 minute, because that's pretty, it just reached
And
a support.
that is the line on the wicks, the 2 wicks, it's the 5, right? The 0.5, right?
yeah, I mean, basically that's...
And that means that traders, long-term traders, they already have placed orders there for that shit. Not even it would out so quick.
So if somebody placed orders here, like if they were looking for a retracement here, and they thought maybe they bought here, or they bought here, and they're thinking maybe this was the top, then you can see that this wick came all the way down and pierced the 618. And you know why? Probably because people that didn't get in here, or maybe they did and they sold up here because maybe they thought that this was the top right here. So they drew a fib there and then put a buy order at the 618. And so many people might have done that because if they saw this blasted right through resistance, they're like, okay, I'm putting buy orders right at the 618. So when it fell down there, it just bounced and got bought right back up. And then look, this wick did the same thing. So now people are thinking, all right, I want to put my buy orders a little higher, and now that we have more chart data to go off of, I'll move this fib up a little bit. So where do I put my buy orders now? Instead of putting them at the 618 because they're not going to get hit, maybe I'll put them at the 0.5. So people start putting them at the 0.5, it gets bought up. Then you get these levels where, okay, this is no buy zone, my order's not going to hit. Some candle bodies close here, that's some good support. So let me put my buy order just a little bit lower than that. And then look, it got bought up again. So I think it's just more or less a tool that most traders use to identify where people are looking to buy. If the asset's trending up and going to have a retracement, they're looking at
can you stay where? So right there, can you stand right there where you were, like how it went up, and then next time they did buy at the 0.38, right?
Yeah, well, it looks like with this move, most people bought at the 0.5. Like if they thought this was the top of the move. Oh yeah, maybe it was the 0.38. Like if you, depending on where you draw it from there, then it would have bounced off of this 382. But
yeah. So when we retrace from the 0.38, that's a higher pump, right? And,
yeah.
And 5 and the 618 is still healthy, right? But not like the 0.38.
Yeah, the 618 is still healthy, and that's like considered like a full retracement before it's distinguished as a downtrend. You know what I mean? But if it responds to the 0.382, then that's even. If it responds to the 0.382 and then immediately makes a higher high after that, then you're pretty sure that it's in an uptrend at that point. It's if it responds to the 382 and makes a higher high, then it's in an incredibly strong uptrend. So like what it did here, whereas it wicked right off the 382, if you thought this was the top, and then it came down and wicked right off the 382, and then made a higher high after this, that's why it ended up going so bullish afterwards right there. So now if we but neglecting this second one, basically, if we just go with the first example, so now if you can, so all we had to start with before, let's say before Bitcoin went up higher, all we have to go on is this support, and I put a support here because there's multiple wicks and the lowest candle bodies, they closed right there. So if people bought here, it then made a higher high and continued upwards. So whereas the top of the move ended up being higher. So you could even use it backwards. So let me get rid of this real quick. If this is the price action that we have to go off of, right? And there's support here, you could draw a fib. A lot of times I'll use the wicks. So if you determine this to be the top of the move by looking at this as a lower high, you could even put a resistance line right here too if you wanted, which I mean would then ultimately be flipped as support. But you can see like there's candle bodies that closed here, and then it wicked off it here and wicked off it here, and then this one blasted right through it, and then that's why it was able to make a higher high. Like see how this wick is higher than this wick. So but we'll get rid of this for now. So this is all the price action we have to go off of so far. If you thought that was the top, you can also draw a fib extension, which is basically just using the same tool to draw it backwards. So I'm going to put that and I'm going to put those ones in solid.
Real quick, did anyone hear this news? Putin signs law prohibiting crypto payments in Russia. Did anyone see that?
Yeah, I heard about that yesterday.
It was yesterday.
I haven't heard about that, but so you could draw as price action emerges. You could say, okay, it bounced here and it bottomed out, so maybe I buy here because it responded so well to the 0.382 fib or whatever. So people start buying in here. You can then project. You could say, okay, this is where it topped out. If this is where it topped out, and this is where it bottomed out, you can draw a fib like that and project a price target of if it makes a higher high, which it did here. So it broke this high, and then it made a higher high. So now your next price target, you could say, is the 1.618. You could target 37K. Whereas it came up to 34, found support at 28. You could say that your as long as you confirm this is the bottom, it has to make a higher high before you confirm that this is the bottom of the move. But it did that, so we confirm that this being the top of the previous move, this being the bottom of that retracement, you can project up higher. A higher price target would be the 1.618, which is usually what I gun for. This one ended up going a little further because it's Bitcoin. So almost made it to the 2.618. But then you can look at these as almost automatic levels of resistance in price discovery mode. If there is no previous price action, which, like we said, there wasn't, because Bitcoin has never been that high. So where did we actually go? From here, we discovered that wasn't even the full move. So what the full move actually was this. So fib, if you were to draw a fib retracement here, say this is where it's starting to get oversold. People realize, hey, this is getting this is getting overbought. There's too many people coming in. We need to sell. This market's too hot, and everyone sells. Well, if this price action takes a while to happen, say it starts dropping, and people are like, okay, that was the top of the move, and everyone draws a fib. Maybe they're already putting their buy orders at the 382 and the 0.5. So that's what could have caused this bounce to occur here. But if that was theoretically the bottom of the move, if that was theoretically the bottom,
I'm sorry, if you were to draw from the 29 to the 42, and fucking.
What do you mean? 29 to the 42? Like from here to up there? I'm just trying to I don't know, basically, like this was when Bitcoin was more bullish. So these fibs are going to make more sense when you're trying to spot an uptrend. But say you take this fib here and you bring it from the bottom of the move to the top of the move, you can see that it responded well 3 separate times to the 0.5 fib. It didn't really respond that super strong to the 0.382, so people weren't really sure that it was an uptrend until they saw it bounce off the 0.5 3 times.
Yeah, so I was saying, like, from the 29 to the 42, it will give you exactly 2.618. The bottom 29, top 42, like when it went down from 42 to 29.
You talking about like this?
Right where you at, right there, where you at. Yeah, from.
Oh, that's too high. Hold on, where are we? Where you want to go to 42? Oh, you talking about a fib extension?
Yeah.
Or a retracement?
49 to the 29, it will give you exactly 2.618.
Oh, yeah. So, like, you're talking about this. If you were to draw it like that.
Yes, sir.
Then the very top of Bitcoin actually ended up at the 2.618. Like he's saying, that was the final price target. So, like, where was the move? Yeah, so the top where 42, if everyone thought that was the top, and then the bottom was caught at the 0.5 down here. That I've erased, but okay, so here's the move. If you're looking for an uptrend, you take the bottom to the top, and that's your retracement. Sorry. So that's your retracement. And after the retracement, once you've discovered, hey, it's responding well to the 0.5. So we got 1-2 taps here. We also got these wicks back here, so that represented some buy pressure. So after the second tap, the third tap, people are like, okay, I'm going to buy in. And then you get this nice bullish move up. And then as it breaks a new higher high, this one candle, this is actually a J hook right here. But this nice candle broke right through the previous high. So now you know it's in an uptrend because it responded to the 0.5 and it broke a new higher high. So everyone's thinking, oh, this is an uptrend. So everyone keeps buying. And if you, taking this fib extension here, if you draw it from where the last move topped out to where the retracement bottomed out, you can get an idea of where your next price target would be. But right here, you would have seen resistance, except people kept buying it up. This was actually a rising wedge. So, but people kept buying it up because they're FOMOing in and they consider it an uptrend, whatever. So, yeah, keep going is right. This top of this move here at 42, if you bring it down to the bottom of the retracement at 29, you can see that where it topped out, it wasn't actually the 1.618. It was actually the 2.618. So this went higher. This actually went to the next price target. When it came, when it went higher and came back down, you could see it bounced off the 1.618 and then it bounced off it again. Then we made a lower high here and then crashed. But yeah, it responds to the fib levels sort of almost even before they're here. Right here where it bottomed out, you could identify this as support because this was the top of the last move. So if you put a line there, you could say, okay, I'm thinking that there could be support here because this price action happened in here. So people maybe started buying a little early, trying to buy the dip a little early, because if you go and you actually let's get rid of this extension. So let's take this fib and move it up a bit. If people are thinking now that this was the top of the move and it's overbought again and everyone sells out, then they're going to be looking for a re-entry. So if everyone sells out here, people are going to be drawing fibs from the bottom of this move to the top. Now you can see that this move also bounced right off the 0.5 fib. So you can see that this asset is in a strong uptrend because it didn't even come down to the 618. And this area of support that we have here, I guess you could put this line, you try to get as many touches as you can. You could put a line there, a line there. You could even draw it as you could draw it almost as a support zone by being okay, this is where a lot of the buy orders are, and that's your support zone, which you can see actually later on. So right here, it was resistance. It was resistance again, broke through it, and then this became your support zone. So the price bottomed out over that. Did my screen just go dark?
No, I see it.
All right. So it came down and touched right on top of the support zone, but it's also where the 0.5 fib is. So it didn't really have to dip as low as 618. And then if you go forward in time, you can see that it also made a good resistance here. It made a better resistance than a support over here, but that's because it was a strong level of support over here that was lost. So once a support zone is flipped as a resistance, they become harder to break. So we've got our one move in. This was our first move. Came down, 0.5 retracement, higher high. Assets still in an uptrend, a strong uptrend. Now our next move, this was the bottom. If you were thinking that this was the theoretical top, you could put a buy order here. You could even put 3 buy orders. You could put staggered ones. So say you put $100 here, $200 here, and $400 here. Maybe this one never hits, but you're still in for 300. You know what I mean? And the lower it goes, the more coins you end up getting. But anyway, that's kind of like dynamic DCA, which I'm also a huge fan of. But so this is where people are putting their buy orders, and they think, okay, if this one never hits, because it could come down to this support, this support that's right here, they're thinking, okay, if that's where the support is and that's where the 618 is, then maybe I should put a buy order there. But then you also got people that are like, oh, well, I'll put a buy order higher up to make sure that it hits. So if you got someone that's putting $100 here, $200 here, and $400 here, maybe none of these get hit, but there's enough $200 and $100 orders to push it up further. So since this move happened, you know, you've got this move, you got your 0.5 retracement, and it broke a higher high. But I mean, I think that it's almost enough confirmation for it to see a good reaction off of the 0.5, which, you know, it looks like this one clearly had. Bitcoin was really running at the time, like really hard. So if we're now to, you have a full retracement there. So if we're now to take the fib down as an extension to the bottom of the move, you know, you have your higher price targets there. Now this one, unfortunately, since it did break this high, its most previous high, it had a bias to go to the 1.618. But it broke this high, but it didn't quite make it, and people were starting to get shaky and getting, you know, cold feet at this point. So did we make it all the way up there in this one? No, we made it to about 65, but it's still close to the 1.618. How about if we move it, if we do another retracement fib here? So if this was the bottom of this move and we do a retracement fib here, well, what got people to buy in there? Oops, I erased the wrong thing. What got people to buy in there? This was the bottom of the move, and they thought that this was the top. Well, you can see, once again, it had some sort of response to the 382. It had a response to the 0.5 fib, but this one wasn't as strong. So it actually went a little bit lower and almost hit the 618, but didn't even quite hit it. So the fact that it almost made it to the 618, but not quite, only dipped a bit past the 0.5, you know, you could say, okay, this is still in a healthy uptrend. So people that were like, okay, that was the top of the move, now let's see if it's still going to trend up, they draw a fib, they see if it responds to these levels here, and it did. So they could, that might be, if we get a bounce there, that could be a good enough confirmation to get most people to buy in. So people kept buying in. But now
I just put it at the 15 minutes. I just because I have trading view as well, I put the 15 minute at the end of like today's little bull run, and it actually is a very similar pattern to what you just showed, and looks like it's gonna go up.
Oh, on the 15 minute?
15 minute, but today's action, the bull action from this morning when it went straight up. I just put the fib there, and it actually looks quite nice. It looks very similar to what you showed.
Like on our last high, if you measure from 52 to 39, it will give you 3.1618.
This is what you're talking about here?
Right. Yeah, that one.
Yeah, so this is pretty much, whereas it came down, it didn't respond to the 382 or the 5 very well, but it bounced right off the 618. So a lot of people are thinking, okay, hey, this trend isn't over, because it's also been trending up since down here. So if this is the uptrend, you can identify that the thing's still in an uptrend by basically being like, okay, so let's start even smaller. The bottom, we'll start from the bottom and go up. All right, so look, bam, 0.618. People bought in, broke a new higher high. Next one, bam, hit off the 382. You could even move this up to the next move, and I bet you 0.5 fib. Didn't even make it to the 618 on that one. Now, if you move it up here, I mean, this one didn't respond to it. This one fell through the 786, so it looks like people got a little bit. This one fell through the 618, so it looks like people weren't as apt to buy in. So they're kind of confused here, and then they're thinking, oh, wow, what's going on? But there was support here previously, so there's multiple different things that traders are looking at, not just fibs. Now, if we take this from the very bottom of the move and bring it to the top, you can see that where it actually stopped out, like if you're looking at this as one whole move, you can see that where it actually stopped was the 0.5, and that's where it built support before making a new higher high. So if you take this from here to here, bounced off the 382, still in a strong uptrend. Here, this might be a little different because people are probably getting shaky. Yeah, so this again came to the 786, and then people got a little shaky again. But we're also looking at, like, you know, a bigger macro uptrend if you connect some of these bodies and wicks. You know, so people were actually still willing to buy in, and this is where I was starting to think, oh shit, are we going to lose the uptrend?
Can you show that like when we came down from the 29?
Which one? You're kind of roboting. Keep going. But yeah, I'm thinking that what people, because we're consistently bouncing off of these like fibs, people are, you know, excited enough to be buying in still. So I don't know. Like here is the 236. Here it's kind of the 236. Here, if you see this is one whole move, you know, we got a wick off of the 236. So I mean, these fib levels, even if people aren't using them, aesthetically to the human eye, it appears as though it's an appealing point to buy in.
So we start dropping right on the retracement. We start dropping at 29, and then if you do the retracement all the way to the bottom, you'll see that people took profit at the 0.38, which is 21% from the bottom. Like if you start from when we start dropping on the 29,000s.
Like last summer?
Yeah, our last drop. No, our last drop. Because of that drop we're here right now. 20,000, 29,000, remember the range?
Yeah. That's this range right here.
Okay, so measure from there to already bottom. And you'll see that at 0.38 they took profit. No. From where we start dropping to the bottom.
Oh, you mean right here?
Yeah, not the top, the bottom of that formation.
This here?
No, the other one, on where we start dropping the big ass red candles going down. Yeah, on top of that.
So here.
Well, you start drawing after that, no? Below that, like on the 29,000 about.
I don't know what you mean.
Right?
Like, are you talking about John?
Start drawing from there to the bottom.
So you're talking about an extension, not a
extension to the bottom. And look at the number that they took profit, 0.38.
Yeah, so they could I'm trying to distinguish what's an extension and what's a retracement. So that's why I'm making the solid ones are extensions. So yeah, I mean, I would have drawn this from here, but I guess you could theoretically draw it from here, or maybe where we lost the range. I don't know. I guess if you were to, it doesn't. Sorry, it doesn't make much sense to me to draw it from down here, but you can see kind of what he's saying here is that they're taking profits here, and that's where the sell-off is happening. So, I mean, if you were to flip your chart and look for, you know, a strong downtrend, so like if you did the same,
you know how you start drawing as soon when you're going up, you start drawing the Fibonacci after it breaks the little resistance. The same when we're dropping, you're supposed to start drawing after it breaks the support, right? So if you do that, it's gonna take it to the 0.38.
Well, you draw from the previous move. You draw it from the top or bottom of the previous move. This is where you want to start your fibs.
Okay.
But like, say this was, so I've got my chart inverted now. This is an extension, but say I was drawing it like a regular fib. You know, like if I was looking in an inverted chart, if I was looking for an uptrend, like I'd say that this is looking like a stronger uptrend, except it's not. It's a downtrend because it's finding support here, which is actually resistance. Like it's flipping it as resistance. So if you were to, let me put my chart back the way it was. If you were to take it from the previous high, which would be this right here, draw an extension down to the bottom here. Yeah, it hasn't even really made it up to the 0.382 yet. I mean, it's kind of it's been hitting resistance at the 236. Oops. It's been hitting resistance at the 236 and hasn't really been able to stay above it for very long. So otherwise we would have to get above that and at least go up higher to the 0.382 before we start, breaking out of this zone and this whole resistance. But I mean, I can tell you, like, that back here, like earlier on. Yeah, let's get rid of this. I don't want that one to be here. Earlier on, before Bitcoin crashed, so like if people were having price targets here that weren't being met, that's where people were starting to get cold feet, because you could see that, okay, if this is where the move topped out and it bottomed out here, oops, then we have an 1.618 extension. So it didn't reach it there. It didn't even come close. And then even if we move this up to the next peak, which would be here, and we bring it to the bottom of that move, which would be here, you can see that the 1.618 still was not met on the next move. So if you're gonna, the price target wasn't really met. We got 65, not 67. But I think most people were looking for 67. Even people that bought, potentially down here, might have been looking for higher numbers. This is where you get your kind of your projections for higher numbers. So
yeah. So when we went, when we went to the all-time highs, I think if you measure from 52 to 29, that's when you get the 1618, and that makes sense, because we went up to 52 from 29, and you do your extension and you see how it gets us to the 1618.
Well, if we did an extension here, it hit the 2.618. But
if I can real quick.
After you drop there, we went up to 52, right? From 29. So if you measure from 52 to 29, it will take you to whatever we hit exactly on the 1.618 or on the.
Well, I think this is where people were getting higher numbers, like 85,000, 77,000, 63. I think this is
that's exactly 1618. If you
Yeah,
measure from 52 to 29.
I'm just saying, I think that's where people got those numbers from, those higher numbers, like 100K. But yeah, like this, it did. Like if we draw it from here to here, the extension, then yeah, it tops out right there at 2.618. So it actually exceeded the 0.618, the 1.618, and went straight to 2.618.
I'm talking about the highest high, the 69,000.
So yeah, that's what I was getting to. Was basically, well, I wanted to go through the retracements first, and basically,
Oh, sorry.
I want to because yeah, I see what you're saying. Well, it's right here. We can just draw here. You can see that. Okay, the extension, it didn't really break. Didn't really break a higher high. Is this what you're talking about? Drawing it from this high down here?
No, 52,000. 52,000 when we went up from 29 all the way to 52,000, and people thought, oh, that's a top, and then they measured from 52 to 29, and that's when it did the 1618. You see what I'm saying?
Yeah. So it actually broke through here, but it had some hesitation here. Let me go back on the 4 hour and see what it looks like. Because yeah, so
Quite, he's saying anchor it at 29,000 and bring it up to all-time high. Or sorry, anchor it at 29,000 and bring it up to the first pump at 52,000. The end of that first move. So down, so you're going to bring it down to anchor it at the bottom of 29,278 or whatever that is. Yeah, and then that first impulse move that ended about 52, that's the number he's talking about.
This right here?
Yeah, but this is not an extension. I've heard you say extension a couple times. This is not an extension.
Well, this is a retracement. This would be a retracement.
So the extension is a different tool. It's a 3-point calculation.
Oh yeah, you're talking about the trend-based fib extension.
Yeah, that's what an extension is. That's what an actual extension is. This is just using, identifying levels using the retracement tool. But Chubacale or Chubacabra, whatever the fuck, does this all make a lot more sense, or do you have any questions? Because Quai's been putting in some work here for you.
I know, honestly, he's been way over than what I was expecting. This makes a whole lot of sense. Thank you so much. I really, really appreciate it. Makes a lot of sense.
No problem, man. So as we were here, we if we go back to where I pretty much left off, you can see that this is where people started to get cold feet, because if you take this move, until then we had higher lows, right? But then if people took this move and they're like, oh wow, it's not the extension, TD, I'm just calling it an extension. It is a retracement. He's technically right, because this tool is a retracement tool, but a retracement can happen up as well. And I'm only using the word extension to distinguish an upward retracement.
To identify levels above.
Yeah. Okay. So when I say extension, I mean a retracement upwards, and when I say retracement, I mean just a retracement downwards in price. But I mean, like this right here. So whereas the price came down, right, to this level, then so the price came up, came down. This is a retracement downwards. But after the downwards move, it has a retracement upwards.
Or a continuation.
Yeah. Continuation, yeah. So that's what I mean, like a continuation upwards to those higher levels, or a retracement upwards. Like that's what I'm referring to as an extension when I'm using this tool. So basically we have this, if you take the bottom of the last move, the last higher low, and you bring it to the top of this move, and everyone's assuming that was the top of the move. Well, people are going to be looking at these areas, and they're like, this Bitcoin has freaking been flying, dude. It just did 1,000%. Like, it's getting hot. I don't know if I want to buy it, but let's see how it responds to the 618. Oh, it's responding to it poorly, made the 0.5 into resistance, and then it fell, it didn't respond to the 618, fell all the way to the 786. So I think this is where people were finally like, okay, maybe we shouldn't be buying so aggressively anymore, and because it had gone down, and then it even fell through the 786. So after this, I mean, I think that a lot of people were like, okay, the asset is not in a strong uptrend anymore, because if it was, it would have responded to one of these three levels, and it didn't. You can see right here, it actually just fell right through it. Someone's got an open mic.
Yeah, keep going.
So, I mean, if you were to draw this as if, when people saw, hey, it went through the 786, so it's obviously not in a strong uptrend anymore. Now that we've discovered that it's no longer in a strong uptrend, where can we expect to take profit? And if you draw it as an extension from here to here, well, you can see that it didn't, from the peak to trough, it failed to make a higher high. Now, typically, when it breaches the 618 on an upwards retracement, typically it has a bias to go back and to test this line, the 1 line. So it has a bias to do that, and then if it breaks that, you get a higher price target like 75k or 76k. But see, even though it pierced the 618, it failed to continue and match the previous high, and it also failed to break a higher high. And before that, it had also made a lower low. So now people are thinking, okay, this asset's trending down. We got a 0.618 retracement upwards, and now that's where we're gonna have to just sell and take profit because it's trending down. Like it made a lower high, it made a lower low, and then a lower high. The asset's trending down, and everyone wanted to sell. So when everyone sold, it caused this sort of crash type thing. And that's I mean, it didn't even respond to any of these fib levels. Like, if we make this a retracement again, it didn't even respond to any of these levels. In fact, it fell right through the 618, down past, made even another lower low, and then when it tried to come back up, it got stopped out by that same 0.618 before continuing lower. It didn't even respond to this 1.618, and it made that into resistance. So this previous top here became resistance again. Whereas we broke through it and we were bullish in a bullish uptrend here, we broke right through it. But now that we lose it as support, it becomes resistance. So that line now became resistance after that, and we floated in this zone for a while before actually kind of finally capitulating down. I guess you could kind of call it some sort of capitulation before we shoot it up and made our next move up. So now, having said all that, in a downtrend, you're not going to see these fib levels reacted to the same way, because say, let me see, well, I guess we can stay on the 4 hour. If the wick bounced off there and this is the top, you can see, hey, it did bounce off the 618, but then it didn't make a higher high, it made a lower high, and then it fell right through the 618 and touched the 786. So this asset's not in a clear uptrend. If we go and we try to do it from here on the next go up, well, here, it topped out here. Now, it didn't really respond to the 618 that well. It kind of fell below it, almost touched the 786. So maybe people weren't too confident. And then look, it made a lower high. So the asset's still, in a downtrend. Now, if we go from trough to peak here, you can see that it fell through and it made a lower low. And it almost came down as low as the 1.618 retracement. So this is where people were really scared to buy in, and all this sideways action, people were like, here, oh, okay, look, if that was a bottom and this is a top, and it's responding to the 0.5, so I can buy in here. So people bought back in there. But then when they did, you could see that it came down and it fell right through the 1.618 and the 786, went all the way down to the 1.618. Where people finally started to buy in again. So that's an example of where it's not in a clear uptrend. Like even here, that it fell through the 618, almost hit the 786, if we zoom in. So no confirmation of a clear uptrend there. From here to here, you got some people buying in at the 618, I think because they were eager. But then look, it failed to make a higher high. So even though it responded to the 618, it didn't make a higher high, so it didn't really confirm the uptrend to a continuation of the uptrend. Same thing here. Peaked out here. And then...
So where you are right there, go back real quick.
Fell through the 618.
Go back a little bit. So, no. Right, you're in your range. This is kind of why fibs are just a fucking nightmare in a range. So where that fib is currently anchored, Go just hover over it where it is. Yeah. So that high just above that. So delete that fib. And that high that was just before that, anchor it there. Yep, and bring it down to the swing low just after it.
Right here.
So when people are playing downtrends and still trying to use fibs, you just flip them. And then you see if fibs are respected the opposite direction. And so when the fib gang gets split like this, which happens in ranges, it becomes a lot harder to play it, and you got to lean on some other confluence to be able to make some good trades. Otherwise, you just get whipped off.
Exactly, and thank you for that segue, because that actually brings me to the next one, which is like you said, if you're playing in a downtrend, if you think that this was the top and this was the bottom, well, then where does the price come up? So if this was the top and you're looking for a higher price target and you believe that this is the bottom, well, you draw it from here, from peak to trough, and it came up and it hit the 618, but then got rejected. It came back down. It didn't make a lower low. It made a lower high, and then this time it did break the 618, and it went further up and it broke a higher high. So now this asset's in an uptrend. And did it eventually reach the price target? Yeah, it did, up here. And that's where this one kind of topped out the next time. So if you're looking for, let's say, you would want it to break the 618 clearly before, confirming that it's an uptrend. Which here, like peak to trough, it did eventually break the 618 and then made a higher high. So after that move, you could draw a retracement fib that is to figure out, hey, is this thing back in an uptrend? And if you look close, you could say, hey, yeah, if that was the bottom of the move and it topped out here, look, it responded to the 382 pretty well. So, and then it made a higher high. So you can say, okay, now this asset's back in an uptrend. And that's where people started getting convinced that it was in an uptrend. And then eventually hit this higher price target for this extension retracement, I guess you'd call it. But it didn't. Okay, so it didn't. Let's see. See if we got an example here. This peak to this trough. It did pierce the 618, but it didn't make a higher high. And then now, I guess let's come down here. Peak to trough. If we get rid of this one, you can see that it came down and it didn't even make it up to the 0.5 or the 618. It got stopped at the 0.382. So this one, it got stopped at the 0.382, and that's why it ended up getting stuck down in this range, because it got stopped at the 0.382. So I mean, same deal. If you were to, like, if I'm going to flip my chart and I say, okay, like, this was the bottom of the move or whatever, and this was the top, then, it responded to the 618, but then it didn't make a higher high, so it's not in an uptrend. But it's the same thing with a downtrend. So this is an inverted scale. But if you were to look at this, you would say, okay, it came up, responded nice to the 382, but then failed to make a higher high, so it's not in an uptrend. So it's basically the same thing on a downtrend, because like it came up, and well, this one, okay, so this is kind of a bad example because this was such a vicious drop. But it came up, hit the 618, but then failed to break a higher high. So it's not really, it ended up coming down further into a downtrend. But now if we take this from peak to trough, you can see that what actually happened right here was since we bottomed out here and then we measured this and basically discovered, hey, like we came from that bottom. We topped out here. It bounced off the 0.382. We're probably in a strong uptrend. Then people could buy in right here because they've confirmed that it's in a strong uptrend. But then also what further confirmed it is this bigger, extension that if you draw from peak to trough down here where we bottomed out, you can see that right here. We pierced the 1.618. Or sorry, we pierced the 618. Extension. So when it does that, when it pierces the 618, it has a bias to go test the one line, which it did, and it actually broke a higher high. So that's why I think a lot of bulls were sort of in the realm of possibility that we could go higher. Since we broke this previous high, we could go higher to 87,000. Like I had a price target for 87, I think, back at that time. But I mean, to further confirm this uptrend, you could see that, from peak to trough, it came back up, it retraced upwards, pierced the 618 level. Now you got to try to distinguish, hey, is this still in a strong uptrend? Because if that was the top, where did it bottom out? And you can see, bottomed out right at the 0.5 fib. This green line here, that's where it bottomed out. So it did react to the 618. Here, let me get rid of this.
That's amazing.
So it responded to it kind of bounced off the 382 a little bit, but this is where El Salvador got wrecked. Yeah, there was a huge dump this day, and it bounced right back up because this 382 was there, and they tried to fight it, but the dumping was just so hard, and I think they were really, like, this is where El Salvador said we bought the dip, and then they wrecked them even further because they had bought up here, I think, or a little bit around this area. I think they bought when it went up here. There was a huge dump in El Salvador, so we're buying the dip, and then it ended up just dumping further than where they bought. So now they're holding a bag here, they're holding a bag here. The price is down here, but yeah, I mean, sorry.
Michael Saylor bought. Whenever he buys, it drops.
Oh yeah. Well, whenever he says he buys, it drops. But yeah, so when people are like, okay, so it pierced the 618 upwards retracement, you know. So and then it also, like, you know, from up here to down here, it pierced this 618. So that was one bullish sign that I think people had, and they figure, okay, if that was the top of the move, where is it going to fall to as support? Well, we already have this support line that's drawn here because you can see it was resistance here, and now it's been flipped as support. So a lot of heavy price action happened in this area was rejected, this area was rejected. It sort of blasted through this, and then it flipped it as a support on the next go around. So we had a line of horizontal support, that confluence there, plus the 0.5 fib. And that's what made people think, oh shit, okay, it's not even going to get down to the 618. It's not going to hit my buy orders. I'm going to have to buy up here at 41. So everyone started buying at 41, and the thing just shot up. So let's see what the price target would be if we were to draw, like, you know, the reverse extension form of it. And you can see that after... Oops, hold on.
Slancha.
What happened? Oh, jeez. Hold on.
Cheers.
Why does it keep doing this to me? Yeah, I need to go to the store. Oh crap! Now it's too late for me to get booze. All right. So yeah, if people were thinking, hey, this was the bottom of the move, and it broke a new higher high, this is the price target, 61,000. You know, it wouldn't.
Wait, was that a cheers, like drinking cheers?
I think so.
Oh yeah. So drinking's happening very hard in general.
Oh fuck yeah! Sorry, I missed it. I'm catching up. I'll be right there.
So it did meet this price target, but didn't get to the 2.618. So I think people were expecting it to break this high. And I mean, since it did, but it didn't continue afterwards, people got like really, like, I think people were expecting this 87K after breaking this previous high right here. I think people were really expecting this 87K. But see, the thing is, what actually ended up happening was this. We went up to that new high, and then when we came down, you know, if we zoom in on this price action, at this point, I think a lot of people were like, what the hell? Like, it's not going higher. It didn't respond very well to 382. It responded a little bit to the 0.5, and then made the 382 resistance. We were floating in this range a little bit here, and then boom, like, drop. Like, people were just like, you know what? Screw it. The bull runs over. Just drop it. And I mean, when they did that, like, you can see that this 618, as soon as it fell through the 618, it was all over. And this wick right here, like, if I go to the daily, this is where I always look back on the chart and I always say, this candle right here, this is when I should have known that the bull market was over. Was this one candle, this one wick down, because it just broke all structure. So this one candle here, that's on that day, that's when I should have known that the bull market was over. And, like, you know, as you can see, it fell right through the 618 and then turned it into resistance and then fell even further. And I mean, where are we now? If you actually extend this out a little further, where we actually ended up retracing to, because we're on a heavy downtrend, we came all the way down to the 1.618 down here, and we've fallen through even that, and now that's what we're using as resistance. This 1.618 that came from forever ago. You know what I'm saying? So this wick wicked off it. This wick, we haven't gotten any candle body closes above that line, and I reckon that's where we're gonna meet resistance again. It's at 21.6 because of this 1.618 retracement that started all the way back here from when we were at 39K.
So 1.618 could actually be kind of like the temporary bottom just for a wick up, like B was saying. So then we can just go up and then just come straight back down, right?
Yeah. So now if we draw these in a downtrend, like the extensions, this is where this wick bottomed out right here. You can see it didn't even make it. It didn't even retrace back up to the 382, it didn't. It didn't even get back up to the 382, and then it ended up falling lower. So I mean, whereas it consistently did that, if you mark this as the new bottom, it went to the 382, but it didn't even go to the 0.5 or the 0.618. So it came nowhere close to this. This is the line. Whereas if it was to bounce from here, it would have had to pierce this line. And people would have had to, maybe buy in back down here, and then it would have to break a new higher high for it to have remained bullish. But that's not what happened.
Can you go from the top to bottom? Because from all the way, so like there you have the full height all the way to the bottom. Yeah, it seems to be trading. Yeah, on, like you're saying, those 3 lines there. Then they went straight down.
Yeah. So I mean, even though this fib wasn't really technically in play yet, you can see that now the existing fib, like it was meeting it was kind of playing with the resistance there and hesitating here. It didn't even make it, but that kind of ended up being a resistance zone, so if you got like some selling going on here, because this is where we failed to make a higher high before, and then this whole area we kind of got stuck in, and it had a hard time getting past it. And then when we came back up to this zone to try to test it again, it just got totally thwarted. So I'm looking for really more distinguished candle bodies, because this is okay. So yeah, I guess these candle bodies right here, where it's closing there, where it's closing here, and then broke resistance. So it was resistance here, and then it was also resistance here, but broke through it. It was resistance here. So I mean, I think that more or less became a bigger resistance zone, and there was also people panicking. So you can see that even from right here, if people thought this was the bottom, 32K, like you can see from peak to trough, if people thought it had bottomed out here, well, it had a chance of breaking this 382, but it didn't. It would have had to bottom out there, and then it would have had to go up past this 618 and then made a higher low for it to be in a strong uptrend.
Okay, quiet. I'm gonna turn off the YouTube for the rest of the night. So everybody on the YouTube now, it will be back in the morning, probably like around 8-ish, maybe 6 in the morning to 8 would be time, I guess. So Eastern Standard Time.
It would be a time. It would probably be a time.
Yep. So I'll be turning off the YouTube now because we're gonna have fun and stuff. All right.
I'm gonna
see you tomorrow. See you tomorrow, guys.
See you tomorrow, YouTube. Thanks for joining thanks for attending our class, our presentation.
You know what? I might do a class one day throughout the week, but it might only be a 1 hour long session. So I'll let you guys know beforehand. Maybe like on a Wednesday or a Thursday, I could get on for 1 or 2 hours and just go over some stuff in between. But we'll have like a big class where everyone's there probably on the weekend 2 weeks from now. I can't do next week because, I can't give up a whole day of my weekend to this stuff. I've got stuff I got to do.
So that means that I can, now that you're not live, I can rewind.
Wait, I'm still live. I'm still live. But I'm about to end now, and the other one is already there. That's a whole separate video, so you can go back and watch that one already. This is going to be a separate video from that one too. So,
wait,
right,
you weren't watching
my. Good night.